Ladies and gentlemen, can I, on behalf of the Danish EU presidency, welcome you all to this final press conference of the informal Economic and Financial Affairs Ministers meeting here in Copenhagen, Denmark. For this press conference, it's my pleasure to introduce to you the chair of today's and yesterday's meeting, the Danish Minister for Economic and Interior, Mrs. Margaret Vestager. On her side is from the ECB, Vitor Constantiu, and from the Commission, Director General Jonathan Fall. The Minister will introduce the press conference with a few words on the key outcome, and afterwards it's your time for questions. Minister, the floor is yours.
Thank you very much. Today we had 3 items on the agenda. First of all, we had a very good discussion on bank resolution, and that is how to handle failing banks without having to pass the bill to the taxpayers. That is, in the EU lingo, it is the discussion between bail-ins and bail-outs. A common European framework on bank resolution is a key missing piece of the financial regulation reform after the crisis, and it is a crucial thing. Work is already progressing on a global level, and individual member states have done their bit. Denmark, we have done a lot here, as you may know, and we have a case presented from Holland, also in order to show that a number of countries have taken initiative. Now we need to move forward on the European level to ensure that there is a level playing field and better tools for handling cross-border banks. Of course, we need to think about the timing in the light of the current market vulnerabilities, but on the other hand, this debate is not a new and surprising debate. This debate has been going on for a long time, since every nation state have had to relate to the fact of failing banks. And I think that markets would appreciate more clarity in order to know what will be the more precise European framework. The Commission have promised to put on the table its legislative proposal before the G20 meeting in June, and then the Council and European Parliament will examine them from there. And ministers and governors very much welcomed this timetable. Second debate was a debate on credit rating agencies. We needed political guidance in order to move forward on the negotiations on this proposal. We have a lot of technical debates, but I think it's important also to have ministers and governors' input as to how to strike a proper balance. And what we were discussing was the rotation between credit rating agencies and the second, rules for recognizing ratings from outside of European Union. There was support for working on the proposal on rotation, but to try to find ways which is applicable in real world, because you know the market for credit rating is rather limited. So you have to make sure that rotation can actually work. And there was backing up of a very pragmatic approach when it comes to try to find ways for rotation. On third country recognition, the presidency would, on the basis of the discussion, not reopen the rules, but ask the ESMA and the Commission to report back to the Council to make sure that the rules that we have already are also applicable and used in real life. We prepared the G20 meeting. There is one debate which is crucial, and that's the question of IMF resources. It's in April, and of course it's very important to show at the G20 meeting and at the IMFC that Europe is doing its homework. This meeting will take place at a very crucial time for the world economy. Tensions in the financial markets have eased. There is this kind of breathing space, but there is no room for complacency. Implementation of fiscal policy adjustment plans and structural reforms must continue. Credibility is fundamental in making sure that now we do what we said that we were going to do. And as I said, one of these things that will contribute is the question of IMF resources. Important to ensure that the IMF have sufficient resources to play its systemic role for world economy. And yesterday's agreement within the Eurogroup and this very significant decision on substantially strengthening the capacity of its firewall is very important in this respect. Now, of course, and that was the preparation that we did, is the time for increasing IMF resources and to agree upon that globally. It's in the interest of all countries. Focus is very much on Europe, but basically I think it's very important to recognize that there are vulnerabilities in other parts of the country, of the globe as well. You may know this already, but Europe is of course prepared to contribute to IMF resources. Euro area members have already committed to contribute 150 billion euros, and other member states, including Denmark, is also prepared to contribute. Other financially strong countries must come forward with contributions as well. And I think, and I hope, and that's what we're working for, is an agreement in Washington in April. And that being said, I think the meeting is beautifully wrapping up, because we started with decisions on firewall, and decisions on firewall have been very important in the preparation of the G20. But the concrete debates about financial resolution and credit rating also comes into the sort of very focused debate about to stay true to our strategy as to handle crisis in Europe and to move on to further growth and job creation. Because basically that is the undertone of any debate that we are having, that Europe have to come back on track, back on a growth path, but a prerequisite for doing that is of course to handle the crisis situation. And in that respect, from a presidency point of view, the meeting has been very successful because we had the debates that we needed, we had the political guidance from colleagues and governors, and in addition to that, we succeeded in having a very open debate about the cooperation within the European Union between 27 as such, Eurogroup and non-Eurogroup members, and we will move forward on this debate in a very sort of pragmatical and practical manner in order to make sure that everyone has the right information at the right time and that we shuffle our meeting activities in the best possible way. So in that respect, both in our working methods and on what we're working on, new financial architecture and crisis management, I think that we took important steps forward. Thank you.
Thank you very much. All three panelists are now ready to take your questions. The first question we take down here, the lady down here. A microphone, please.
Hi, this is Valentina from the EU Observer. I had a question about the FTT. I know it wasn't really discussed today, but there was this German proposal and some ministers made comments on the way in. Did you have any feedback from the British minister if he would agree to this two-phase compromise version? Thank you.
Thank you. And the next question to the gentleman in the first row.
Mark Wagner, German television. I know, Margrethe Vestager, you as a Danish minister, you are fond of pictures and you play with them from time to time. So let's say the European transaction tax on the level of the 27 was a patient and you were the doctor. What kind of diagnosis would you give the tax after this meeting? I'm asking because rumors have that there is a working group of finance ministers which include those in favor and those against the transaction tax on the level of the 27.
And one more question before the diagnosis. Behind here, the lady.
Hi, Sarah Collins from the Irish Independent. It's a question for Mr. Constancio, actually. There's ongoing technical negotiations between the Irish government and the EFSF, as well as the ECB, on possibly replacing the promissory notes issued for the former Anglo-Irish Bank with EFSF bonds. Is that collateral something the ECB could see itself accepting in the future in exchange for ongoing liquidity to Irish banks?
Thank you very much. We start with the ECB.
Thank you very much. Well, that debate and that issue, of course, as you just described, is something basically between the Irish government and the FSF and the member states of the Eurogroup. We are not directly involved into that, but of course EFSF bonds are eligible bonds for any bank to use them as collateral. Yeah.
Minister?
Yeah, well, basically not to push the picture of a patient too far, but basically the patient is the financial sector. Because all the things that we do is to try to get him fit for a fight in a solid and constructive way. Because we need him. We need a strong, well-working financial sector in order to make sure that there is no credit crunch, that small, medium-sized enterprises can get their loans to expand what they're doing and to create more jobs. And one of the means that we have been considering on the proposal of the Commission is the tax of financial transactions. And we will keep on the technical investigations, because if this mean, which is not the thing to do, then we should figure out what else to do. And you know very well the positions of the individual countries. They haven't changed since they were aired the first time in November. So I think that it's very important to realize that what we have is a constructive, open debate about what do we want to achieve. And it is important to realize that there is a very strong wish that the financial sector contributes, both to crisis resolution, but also in general to the real economy in terms of being well-functioning. And second, there is a very strong risk that we, with strong regulatory measures, make sure that we will not have another 2008 crisis. And that the second path to try to find alternatives is exactly about that. And colleagues have aired ideas of an activity tax. We know that in Denmark, we have an activity tax on salaries of 10.5% to counterbalance the fact that there's no VAT. And another proposal from colleagues is to take inspiration from the UK stamp duty and see if that could work, if that would be a measure and a means to reach overall goals. And I think in the processes, more ideas will come forward so that we will be able, on the basis of the debates that we had here, to move forward and to have a more consolidated debate later on. Primarily, I think, on alternatives, because that is where you find sort of the most constructive atmosphere.
Thank you. We take a second round of questions, and we start down here.
Thank you. Still on the same subject, Alvis Armelini from the German press agency DPA. The German proposals, the way I understood it, said that because there was an idea of the ECOFIN to come to some kind of an agreement on the FTT by spring 2012, and acknowledging that this is impossible, they proposed this intermediate step. The question is, do you have, as presidency, any idea for a timeline for when this intermediate step might actually be agreed? Thank you.
Thank you. And the next question is... Thank you. And the next question is on the fourth row, I think. Jim, please raise your hand.
Thanks. James Cantor from the Herald Tribune, New York Times. It was mentioned that there was greater flexibility on credit rating agencies to look at the options for rotation. What led to that breakthrough? Was there greater flexibility basically shown by some member states? And secondly, on the same topic, you mentioned ways of making rotation work in the real world. Can you suggest to us some of the ways that could be seen to happen? I mean, what was put on the table this morning? That were there actually concrete alternatives put on the table to look at that? Thanks.
Thank you. And a last question from up here.
Jeff Black from Bloomberg News. For Mr. Constancio, with regard to the firewall that was engineered yesterday, from the point of view of the ECB, is that the best possible outcome? Could there have been more commitments made? Do you believe that that's a credible defense?
Minister, please.
I think it is difficult to be very precise on the timeline because it depends on member states. How can we proceed and with what pace? And I think there will be different views as to whether, for instance, a stamp duty would be a first step to more financial transaction taxing, or it would be the thing to do. And I think it's very important to have an open mind when it comes to this, and to be in a solution-finding mode. Because what I think is very important for the presidency is to stick to the fact that actually we share some of the same goals. There is a very common view on financial sector, basically. And what you see in some countries who are opposed to the financial transaction tax, you see very strong national measures addressing the financial sector, for instance, in the UK. But we will do our best to be able to come back to the issue during our presidency, either in May or in June. But I don't foresee that we can take very hard conclusions, because then, of course, we would need the Commission to come back with concrete proposals if it was to be legislative. Is that it? Well, something like that, measure. On rotation, I'd say that members have great concerns about the present proposals about rotation, because there are very few credit rating agencies who actually have the capacity and the muscle to do the credit rating that we're discussing. And a number of ideas have been tabled, but not very concrete ideas. Basically, you would work with the time space as to when to rotate and how many issues should be issued before you'd had to rotate, but also with a very strong sort of acknowledgement of the fact that a number of issues would have 2 ratings already to be credible in the market. So in that respect, that is a small sort of enhancement of more competition in the credit rating market, which is one of the things that I think all colleagues is preoccupied to pursue, but to do it in a pragmatic way, realizing that maybe the market of credit rating is not that mature. Could I say just one thing on firewall? Because what was obvious in this meeting was that colleagues see our work on restructuring the financial sector as a number of things being done at the same time. Firewall is one thing, but it cannot stand alone. You need fiscal consolidation in national, which is a national responsibility. You need reforms, which is a national responsibility, but you also need to work directly with financial sector, that be credit rating agencies, that be capital requirements. And capital requirements keeps coming back, and we hope very much in the presidency that we can move further on capital requirements, because it is a key element as well as financial resolution.
Thank you. Well, in what regards the firewall, our view at the ECB is that it is credible. As you know, it is within the range of expectations that was out there. May I remind you also that when initially a firewall was decided in May 2010, The FSF was created with member states committing 440 billion. Now we are at 800. It's a big increase. By definition, a firewall is not to be necessarily used, is there as a safety net. And what is important, as the Minister just underlined, is that the work of the countries is very important. Precisely what everyone wants is that the firewall will not be needed in the end, is there as a safety net, that it's important for the markets to know that it is there if there is an emergency. But the fact that several countries have been embarking into bold programs of reforms in the past few months has had a major impact on the perceptions of markets, as it should, and that's very encouraging. And so the firewall, as it was now increased, looks to us as being absolutely credible. Thank you.
Thank you. We take one more round. We start up here on the third row.
Peter Spiegel with the Financial Times. Question for the Minister. Sticking with the issue of firewall, you mentioned that Denmark, you reiterated the Danish commitment to participate in the IMF fundraising. Some non-Eurozone countries have said they were waiting to see how the Eurozone did with its own firewall before it made a decision. Around the table today, were there any comments by the non-Eurozone countries about whether they thought it was enough and whether that would encourage them to then move forward and participate in the IMF fundraising? Thank you.
Thank you. Are you still on for question? Okay, then the lady in blue, yes.
Hi, Riva Framovich from Dow Jones. Back to the bank resolution issue. What was the discussion today on bail-ins? Did you go into any details on that? And also on the issue of each country building their own bank resolution funds. Is there any progress on this? What is the timeline you see going forward?
Thank you. And the third question from down here. Anne?
Thank you, Anne Carl from the Irish Examiner. On the FTT, the UK stamp duty that you've mentioned, as far as I understand, doesn't catch derivatives. How important is it for you to include derivatives in this? And I understand you've set up a working group. Could you tell us about that, please?
Thank you. Will you start? Minister?
Well, on firewall, I think it is very important to know that we find that it's a credible firewall. And I think that's the most crucial thing, that a decision has been taken, full stop. It's a credible firewall. And that also makes each member country sort of in a position where to make up the mind as to whether contribute to IMF resources or not. A lot of countries have already made the decision. Denmark is not the only one. And I think that the last country will make up their mind before the IMF G20 meeting or the G20 IMFC meeting in April 19th to 20th in Washington. On bank resolution, there is a very strong commitment to the fact that a European framework should contradict the risk of moral hazard and the risk of taxpayers' money being always sort of in the game, and to find other ways. And it's not financial resolution alone which will do the trick. Of course, capital requirements will be important as well. And within the discussion about financial resolution, there is the discussion about bail-ins, and there is the discussion of resolution funds. Both things are controversial. And the Commission will consolidate in the coming weeks on bail-ins to find common ground and to see if they can include it in their proposal. What we see is that each country has a very strong interest in a common European framework, because some countries have moved forward, Holland, Denmark. Some countries have been awaiting for the Commission to put a proposal on the table, but everybody has the sense that this is a very important and key element of a new financial architecture in Europe. But there is no definite conclusion yet, and we will see what will be put on the table by the Commission. On the derivatives, important decisions was taken on the first ECOFIN meeting this year in passing the proposal named EMIR. It's become a very close friend of mine, working with this proposal. And I think that is very important because it throws light on derivative trading. And it is very important because what we saw in derivative markets was that there was a lot of things which was unclear and which was very difficult to handle. And that is one way to address the question of derivatives. And there is no, at this time, clarity as to what to address in what ways when it comes to alternatives to the financial transaction tax. In some countries, derivatives is a very important tool when it comes to ensuring prices of raw materials, etc. And we're trying to have a very nuanced debate about derivatives, not naming every derivative as being bad and evil speculation, because some derivatives are highly needed in some markets in terms of insurance, according to the national geography of pricing, etc. So it is quite open yet, but I think that what's important to remember is that no matter if the financial transaction tax would have been implemented yesterday, we would still have a lot of regulatory work to do in order to make sure that we had a healthy financial sector.
Yes, thank you. If I may add something very briefly on the firewall and the contribution of other countries to the IMF, just to underline again that what is at stake regarding the IMF, it's not directly related to Europe. What is under discussion is an increase in the general resources account of the IMF. It's not for Europe. It's not a specific fund or specific account for Europe. It is the recognition that in general, for the world economy, the IMF needs to have more resources if we think about the size of what in a future emergency situation can be the needs of the IMF to fulfill its role anywhere in the world. So that's, I think, very important to understand, because this linkage with the European situation has been really, in my view, overplayed and exaggerated by some. Regarding the second point on resolution, I would have just two comments. We have been in favor always of bail-in being an instrument for resolution in the end. By the way, it's one aspect that is included in the key attributes prepared by the FSB and approved by the G20 in the Cannes summit. So it's nothing new or extraordinary. For bail-in to be really useful, as it should be, nevertheless, it is essential that a trigger for supervisors to be able to use that must be clearly defined in the regulation. It should not be something that should be left to discretionary decisions of supervisors. Some objective criteria must be in the regulation in order for the market to put a proper valuation on these bail-inable instruments when they will be issued. And let me say that in my various contacts and meetings with the banking sector, with the industry in general has changed its position, and it's now much more close to the idea that bail-in is really a useful instrument. So that has happened. I won't go into any details of those meetings, but I can assure you that this has been the case. And for instance, today also we had the president of the European Banking Federation, and he was explaining the views of the banking sector, but not being hostile with the idea of bail-in. So it's also very important to underline that, because some time ago, last year, there was some controversy and apparently resistance, but that has changed, and it's important to also underline that. Finally, regarding the resolution funds, our view has been, and it's public in our opinion on a previous consultation paper of the Commission, that we think that for cross-border banking groups in Europe, we should have a European approach, going in the direction of a future European Resolution Fund. And that is even more necessary, in our view, for the euro area countries, as the degree of interconnectedness is, of course, bigger in a monetary union. This is important because it would achieve two things, which is, first, it would disconnect more the banks from the sovereigns, which is important in view of the situation and the understanding of the crisis. And the second reason is that, of course, the easiest way, quote unquote, of solving the problem of burden sharing in resolving a cross-border banking is to have, from the start, an European Resolution Fund, because by definition then the burden sharing rules are already agreed upon and there would be no problem. So these are the two reasons why we have been from the start in favor of that evolution, and several participants today in the meeting also express similar views. Thank you.
Thank you. That was the last question and the last answer of today, and therefore also of the press conference, and therefore also of the informal ECOFIN here in Copenhagen. On behalf of the Danish presidency, I would like to thank all of you, and so many of you, for coming here to Copenhagen, to the informal ECOFIN. I hope you enjoyed your stay here in Copenhagen. We certainly enjoyed having you here and hosting you here, and we wish you all a safe and pleasant journey home.